All right, and we are live. Perfect. Welcome everybody to our live show. Today is Thursday, March 28th, and today we are going to talk about the stocks to watch right now. I'm going to talk about the stocks that I'm trading right now, and I'm going to show you the difference between a stop and a limit order and when to use which order, because especially when trading, it is extremely important that you know which order to use. Whether you should use a market order, a stop order, or a limit order. And if right now you don't even know what that means, stay tuned because that's what we're going to talk about today. Now, if this is your first time here, hi, I'm Markus Heitkoetter and I show people how to generate an income by trading stocks and options. But not how you might think. You see, people come to me because they want to make enough money with trading so that they can retire and spend more time with their families and travel a lot like I do. And even though they've already saved some money in their retirement account, most people tell me that they don't get enough returns to be able to retire anytime soon. They just can't they just can't seem to find a way to make their nest egg grow, and they tell me that this makes them feel stuck and frustrated. Now, if this sounds familiar to you, you're not alone. Lots of people go through this, and I can totally relate. How can you not be frustrated? You save money, put it into your retirement account, maybe even invest in some of the stocks that everybody is talking about or recommending to you, and then you realize your retirement is not growing. How can that not be frustrating? Now, here's what I tell them. There are only three things that you need to know when trading. You need to know what to trade, when to enter, and when to exit. You see, trading can be simple, and I will prove it to you. But first, before we do this, let's take a look at today's news. So, let me show you what I found here for you today. We'll talk about the markets here in just a moment, but let me see. Here is something that I found today. I already put it away, I believe. No, we're going to talk about this a little bit later. Yeah, so what I noticed today is somebody won the Powerball. So the Powerball this weekend was $768 million, and somebody in Wisconsin won it. Now, the cash prize is $477 million. So what does it mean? Why would they say he won $768 million, but then the cash prize only $477? Well, the higher number is for an annuity over the next 29 years. So you can choose to take $477 million. Now keep in mind, you still have to pay taxes on this. So let's see, this should be probably around, what, $140 million? But there's $300 million left, not bad. Now here's the challenge. The odds that you're winning the lottery, as you know, are astronomically. And I actually looked it up, and the odds to win the Powerball is 1 to 292 million. 1 to 292 million. Now, I looked up a few things just to put it in perspective. And here's what I found. It is more likely to be killed by a falling coconut. Not hit by a falling coconut, killed by a falling coconut. The odds are 1 in 50 million. Again, still better than 1 in 292 million. Anyhow, another thing, you have a better chances to be attacked by a shark. It's 1 in 12 million. In fact, the chances of being struck by lightning is 1 in 1 million. Now again, compare this to being the lottery, and you have heard it. It's more likely to be struck by lightning than winning the lottery. How much more likely? 292 times more likely. But here's something especially for you. It is more likely that you become a millionaire, because right now here in the United States, 4 out of 100 people are a millionaire. So instead of 1 in a million, 4 out of 100, this means 1 in 25. See, chances of becoming a millionaire the regular way is much, much higher than playing the lottery. So let's trade, shall we? Let's talk about trading. By the way, if you're enjoying this show thus far, make sure that you hit the like button or one of these thumbs up that you see on your screen, or maybe even a heart. You can hit it multiple times. That shows me that you're here, and I really appreciate it. So let's talk about what happened in the markets today. The Dow Jones just closed. Let me go back to the charts here. Up today 70 points. Let's take a look at intraday, what happened throughout the day today. So we started higher, and as you can see, we had a drop. So there was a little bit of a scare, but then the Dow bounced all the way back. So what was in the news today? Well, in the news today is the real GDP was being released. Here, let me show you the calendar. So here's a calendar that I like to use, and you see the final GDP came in at 2.2. This has been revised, as you can see, from 2.6. A month ago, the gross domestic product was announced as being at 2.6, but this was an estimate. Today, the final came in at 2.2. Now, keep in mind, the quarter before, it was 3.6. So the economy seems to go down from 3.6 to now 2.2. And this is why the Fed right now is no longer raising interest rates, and pretty much they're done for 2019. That's what they said. Maybe a raise or two in 2020, and this is what we see right now in the markets. So markets are definitely a little bit nervous. So why the rally? There was some good news. The US delegation arrived in China today for a 2-day talk, and they arrived in China and they said, yes, we are hopeful, everything seems to be fine, and this is where everybody got excited. But again, as you can see, basically for all of March, we are closing in at the end of March, and the markets haven't done anything. So for the March, markets have just going down. So what are the stocks to trade here today, or to watch today? One of them is being LULU. Lululemon today had better than expected earnings, and we're going to talk about this here in a moment, because somebody had a question of what happened here to LULU as it came up on the PowerX Analyzer. So I want to show you exactly how you need to use the software. Anyhow, Lululemon up 14.2%. Now compare this to Nike, because Nike a week ago had worse than expected earnings. Pretty much same industry, right? So here, let me see if we can choose a better color for this style. Let me use red here. So this chart here is Nike, as you can see, lacking behind Lululemon. So it's no longer an excuse that the sporting industry is going down, as Nike made us believe that less people are buying sports apparel, because look at Lululemon. Anyhow, this is why you want to trade what you see, not what you think, right? So let's take a look at the stocks that I'm trading here right now. So the stocks that I have in my portfolio, you have heard me talking about this. CLF, still a really good short. So CLF is one of the stocks that I'm trading, and I'm betting on a falling market here. So today we were coming up a little bit, but still very nice in the green here, as you can see. Entered here, betting on a falling market, and it's working out really nicely. SLCA, this is a stock that I bought. So here is where I'm betting on a rising market. And today SLCA is up 2.87. That's great. So as you can see, I'm nicely in the green here. This is where I entered right here. This is where prices are right now. So I expect price to go up to $18.94. So this should definitely be good. All right. Then yesterday I entered into CDXS. Didn't move a whole lot yet, so this is where I'm betting on a falling market. So let's see if CDXS keeps falling, and if not, I'm getting out of it. And PLT is another stock that I entered yesterday, and let me just bring it up here. Also, PLT betting on a falling market. So let's see how this goes. Today, I tried to buy CRC, and let me just remove this because this is no longer valid. I've been trading CRC. CRC has been good to me. And today I wanted to enter, and I did not get filled. And in a moment, I'll explain why. But first of though, first of all. If you're interested in learning more about how I find the stocks that I personally trade, I'm using a software that is called PowerX Analyzer. It's a software that I developed that shows me exactly the best stocks to trade, as well as exactly when to enter and when to exit. If you're interested in how I use the software and my trading routine, go to a website that I set up for you. It's called mytradingroutine.com. There's a 35-minute video that shows you exactly how I look for the stocks, the important things, what to look for, the indicators that I like to use for entering. It shows exactly how I place my exits, how I limit my risk, and when I take profits. And if you're interested in this, please go to mytradingroutine.com. There's a video that you can watch, approximately 35 minutes, that shows you everything in detail. So let's see, is this helpful thus far? So if it is, please do me a favor. It would mean the world to me if you type in a comment and say, yes, this is helpful, and I see that you have a bunch of questions, and I'm really excited about this. I will answer your questions towards the end, so give me a few more minutes to go through what I wanted to share with you today, and then I'm going to take a look at your questions and make sure that I answer as many as I can. And if not, I'm doing a dedicated video, as I do today, because in a moment we are going to talk about the difference between a stop order and a limit order and when to use what, right? So this was a question that came up, and I appreciate all the feedback. But first, let's do this here actually. So I received a comment from one of you. Can't remember. I stripped out the name. Hi Markus, please explain. Yesterday at your video was a Software PowerX stock LULU in red. Sell. The stock is today up after strong earnings. Absolutely. See, it is extremely important that when you use a tool, that you use it the right way. It doesn't matter whether you use a tool or a trading strategy, right? You need to make sure that you fully understand the trading strategy before you use it. As an example, let's first talk about, and let me zoom in here actually a little bit. So let's talk about LULU. So we did have this actually 2 days ago, as you can see. I hope that you can see it at the bottom of the screen. March 26th, today's March 28th. 2 days ago, LULU said, yes, it is more likely for the stock to go down. But then yesterday, we got a black bar saying that it is more likely for the stock to change the direction or to go sideways. As soon as you see a black bar, you're getting out of this. And you see, this is how you can easily avoid being trapped into earnings. So anyhow, first of all, make sure that you understand the rules. So we did have a red bar 2 days ago, but then yesterday the software said, you know what? It might reverse direction, so do not go short. The second thing is, when I'm looking at stocks to trade, I want to make sure that there are no gaps. Now, what does a gap mean? A gap means these white spaces that you see right here, and you also see it right here. What do these white spaces mean? It means that LULU was trading at here 107, and the next morning it opens up at 119. A strong gap, a huge gap, and it did it again, and it did it again. Now let me ask you this. When you see that a stock is showing a gap that is jumping every few months, and if you look back at the chart, you see every 3 months, what does that mean? What does it mean? What is causing this gap? Exactly, you're absolutely right, earnings. So it seems that LULU regularly surprises its investors, right? Regularly they say, oh, you know what, we did better or we did worse, and this is why you have the gaps. So one of the rules when I trade stocks is that I want to make sure that there's no gap. So therefore, LULU, if you switch back to the charts, does not even fit my criteria, because we have a gap here, and we have a gap here, and we had a little gap here. Because if a stock has been gapping in the past, it is more likely to do it. So this is why it is extremely important that you know the rules of the strategy. Now there's one more rule that I have before I'm entering, and this is why I keep saying, for example, today I tried to buy CRC, but I didn't get in. And this ties into what we're going to talk about in just a moment, stop orders and limit orders. There we go. So, because let me show you, what I want to see is when I'm getting a red bar, to sell the stock, I want to make sure that we break below the previous low, that we really have momentum to the downside. And in the same way, I want to see that if we see green bars before I enter, that we actually have momentum so that we are taking out the previous day's high. Let's actually jump over to CRC, which is the stock that I tried to buy today. So as you can see, there is a green bar, and now I want to see that we are going above the previously established high. And this is what PowerX tells me. It says buy to open at 26.42. So it is extremely important that you let the market come to you. This is one of the things that I've learned over the years trading. I'm no longer chasing the market. I'll make sure that the market is coming to me. This is why I'm drawing a line in the sand and say only if we cross this line in the sand, then I'm willing to buy or sell a stock. So going back to the excellent question that we had from one of you, make sure that you understand the rules of the strategy. And this is why it is so dangerous if you're using a strategy without knowing what's behind it. This is why, for many years, as you know, I've been very hesitant to put this software in the hand of other traders. And I want to be honest, I'm actually considering of only making this software available if you sign up for private coaching with me. So I might actually no longer offer the software. So if you're interested in it and want to get it before I change my mind, do it now. Let me know, because we do have a special until the end of March, and I might actually really stop doing it because I don't want you to get hurt. You see, your money is important to me because I feel that I have a responsibility for your money because you're following me here, which I really appreciate, and I want to make sure that you understand the strategy. So just in summary, and then we talk about stop and limit orders. In summary, I would never have traded LULU for 3 reasons, right? And I mean, this is why. The first reason, it showed a black bar. A black bar means stay out of it. The second reason, even when it showed a red bar, it never went below the previous day's low. And third, it did show a gap, and I do not trade stocks that are showing a gap. Is this making sense? And is this helpful for you? If so, make sure that you leave a comment if this helps you to understand better my thought process before I pick stocks to trade. And so if we go back to here, for example, CRC, you see that CRC is a stock that does not have any gaps. It is really nicely trending. This is why I tried to trade it today. On the other hand, we see, for example, a stock like LULU. We just looked at it. What is another one? I think it's FLR, is a stock. See, lots of gaps. Right here, right here, right here. So you want to stay away from stocks like this. All right, if this is making sense, leave a comment, like it, hit the like button so that I know that this is really helpful for you. All right, so let's talk about the difference between a stop order and a limit order. What is a limit order? What is a stop order? When do you use what order? And you see, this is extremely important because, as you'll see in just a moment, when you try to enter or exit a trade and you're using the wrong order, you will lose money. You need to know which order to use for your entries and for your exits. So let's actually jump here on the whiteboard, and this is my handy dandy pad with which I can explain to you the difference between a stop and a limit order. So let's actually draw a little bit. So I want to draw a stock price. So there's a chart here, and I want to draw a line in the sand here where I say, okay, so let's say we specify a level of 100. And now let's say that we are betting on a market that is going up. So this means that we want to buy a stock. So if we want to buy a stock, as soon as it crosses above 100, we would specify that we buy the stock, which could be, for example, Apple, at 100 stop. This means as soon as Apple moves above 100, buy it. Now, on the other hand, if we want to buy Apple and pay a maximum price of 100, this is when we say, okay, I should have probably drawn it slightly differently. Let me do this. Let me just move this above, because then it might actually make it a bit easier. Look at this, what I can do here on my handy dandy notepad. Okay, so on the other hand, if you want to buy Apple and want to pay a maximum of $100, you would say, actually, there we go, buy AAPL, Apple, at 100 limit. So what is the main difference between a stop and a limit order? A stop order is being executed as soon as prices move above the price if you're trying to buy it, right? So as soon as we move above 100, you're buying it. So if Apple opens the next day at 110, you're buying Apple at 110. On the other hand, if you're specifying a limit order of 100, meaning that you only want to pay a maximum of 100, and the next day Apple opens at 110, you would not get filled because you specified that you only want to buy if you are below 100. Is this making sense thus far? Okay, so then let me explain the same thing for the downside if you're trying to sell something. And in order to do this, let me actually go to the next page and we do the same thing. We are drawing a quick chart here, okay, and we are putting in a level of 100. But now the major difference is that instead of buying, we say we want to sell a stock. Because when you sell a stock, it is the exact opposite. Again, when you're buying and you specify 100 stop, you're buying when it moves above. When you're selling and you're betting on a falling market, if you say sell AAPL at 100 stop, it means that you're selling it as soon as it goes below $100. Now, on the other hand, if you're specifying a sell order to sell AAPL at 100 limit, it means that this is being executed if prices are above 100. So might screw a little bit with your brain. The good news is you can print it out, you can put it on a post-it, and you can do it on your screen. So let me give you the shortcut of when I use what order. So let me just see. I should be able here to add another page, I guess. Add a page above, below. Let me just see. There we go. There's a new page. Okay, so let me give you the shortcut. The way how I personally trade. For my entry order, I always use a stop order. And this is what we talked about because I want to make sure in a rising market that we move above the previous day's high. And only when we do this, I want the order to be executed. So for my entry order, I am using a stop order. Now for my stop loss, for my stop loss, and the name kind of says it already, I'm using a stop order because I want to make sure that if the trade is going against me, as soon as it hits the predefined level, that I'm automatically exiting, right? So this is where if I bet on a rising market and the stock goes against me, as soon as it hits my predefined level, I want to get out of this. Now, for my profit target, I am using a limit order, okay? Because I want to make sure that I'm taking profits as soon as we are crossing above a certain level. So this is the shortcut basically. So for your entry order, I recommend using a stop order. For your stop loss, use a stop order, and for your profit target, use a limit order. Is this helpful? And again, this is not supposed to be a comprehensive explanation because, as you can see, it can get tricky. I want you to remember the shortcut. Now, I want to touch on one more order that you might have. If you're not specifying whether you're using stop or limit, if you're not specifying anything, by default, you're using a so-called market order. And when you use a market order, this is writing a blank check to your broker. It means buy or sell at whatever price. I don't care about the price. So when would you ever use a market order? Well, for me personally, this is the so-called oh shit order. Oh, we probably have to bleep this out. Bleep. Okay, so it means when you realize that you made a mistake, let's say you wanted to buy 100 shares of Apple, but accidentally you bought 1,000 shares of Apple. In this moment, sell at whatever price, because trust me, it usually only gets worse. Or when you realize that you used the wrong order, or when you realize that you are in Lululemon and then you realize, I shouldn't be in there, and you just see it's in my account, liquidate it, okay? When you made a mistake, liquidate. Write this down, it's a good one. When you made a mistake, liquidate, that's when you use a market order. It is the oops order. Other than this, I would personally never use it because it is like writing a blank check to your broker and tells your broker when you say buy Apple and you do not specify a price and an order type, it means buy Apple at whatever price is right now available. And I like to have a controlled entry and exit in the market so that I know exactly at what price I'm getting in and out. Because after all, as you know, I am German and I like it to be precise. I also like the market to come to me, and I don't like to chase the market. This is why I'm drawing these lines in the sand, and then I'm using stop or limit order so that my order is getting executed once the stock crosses this line in the sand. All right, well, I hope that you found this helpful, and if you did, click like and leave a comment and say, yes, this was helpful, and I hope that you enjoyed watching the show as much as I enjoyed making it for you. And if you know anybody who might find this video helpful, please feel free to share it, because especially the part about using a stop and a limit order is extremely important. When you use the wrong order, you might lose money. Almost always you lose money because you're entering when you don't want to enter. Anyhow, so let's take a look at some of the comments that you might have here, and really appreciate all of your comments. Matt, it is so good to see you. Matt, I recently saw that you are labeled by Facebook as my top fan. So thank you very much for your loyalty and tuning into the shows. Being the top fan. Dion, I think Facebook might give you this label here very shortly. So very good to see you. Eric, man, it's so good to see you. Yes, so I'm glad to see we met at the boot camp. Used your PowerX analyzer. I made a good profit out of the 2 stocks that the system found. Very happy for you. This is excellent. This is what I want for you. I want you to use the tools, and when you use them in the right way, there are good chances that you'll make money. I mean, In the markets, there are never any guarantees, but we put the odds in our favor. Again, if you're interested, if you just tuned in and you're interested in knowing on how I trade and what tools I use and what Eric is talking about here, go to mytradingroutine.com. If somebody could put this in the comments, I would appreciate it, because somehow I can't seem to manage to put stuff in the comments and talking to you, then I make Facebook or YouTube explode. Anyhow, okay, good. Raza says, loves my trading style. I like your thumbs up in your profile picture. That's awesome. So good to see you. Hey, Lorena, good to see you. Holly, wasn't me. No, for sure not. For sure not. Okay, Eric, this is one I asked earlier. What is causing gaps? Absolutely. This is earnings. Correct. Lorena says, makes sense. Rika, hey, so good to see you. Okay. And these are the questions too. When I said, when do you use a market order? When you want to get out ASAP, you're absolutely right. This is why I say this is the oops order, when you realize you made a mistake, right? And Lorena also, correct, never. Yeah, well, the question was, when should you use a market order? Eric, the price goes to you when you want to get out ASAP. So Lorena, there are some times when you want to use a market order. When you made a mistake, get out of there. Okay, Lorena says, mytradingroutine.com. Thank you so much for typing it in here. Well, guys, thank you so much for being on here. Really enjoyed doing these shows. I know that today we were an hour early. Usually I'm doing these shows at 4 o'clock Central Time, but today I have to pick up my son from school, so which is at 4 o'clock, so I have to leave the house here in a few minutes, and I didn't want to miss it. I wanted to spend some time with you, so thanks for being flexible and jumping on it early here. And for those of you who are watching the recording, if you hung out here until now, you hung out with me for 32 minutes. And when you're already 32 minutes in, might as well go to mytradingroutine.com and take a look at the video that I have for you there that is 35 minutes long and shows you exactly how I find the best stocks to trade, when to enter, when to exit, when to limit your risk, how to limit your risk, when to take profits, and it also shows you more about the software that I'm using. And if you're interested, you can just click on a button there, schedule a time with Rachel or Paul to get a demo so that you see what this software is all about. All right, fantastic. Y'all have a fantastic day. Enjoy the rest of the day, and I'll talk to you very soon.